Okay, so here we're going to look at the 2023 company final account, East Elm Ltd. So as always, we're going to use the 5 steps to complete the final accounts. Step 1 is going to be to lay out your accounts, which will take you 5 or 6 minutes. Step 2 is to transfer your figures into the accounts from the trial balance, which will take you 6 or 7 minutes. Step 3, you will calculate the investment income and debenture interest for the year, which should take you about 3 or 4 minutes. Step 4, you'll complete your adjustments, which should take you approximately 32 minutes. And step 5, you'll tot up your totals, which should definitely not take you more than 5 minutes. And if you spend more than 5 minutes there, you're making a wrong choice. You need to move on to your next question. Okay, so just showing you that is an example of a completed company account there, where we have all of the workings done on the face of the accounts, which is going to save us a lot of time in the long run. Okay, so first step, lay out your accounts. So it's very, very, very important that we have the bottom of the trading profit and loss and the bottom of the balance sheet filled out absolutely correctly, okay? Because you could lose marks if you do not put the items in this order. So if you want to follow along with the video, stop the video there and write in the layout. So 5 or 6 minutes. Okay, so step 2 then, we transfer our figures from the accounts, from the trial balance into our accounts, into our trading profit and loss and balance sheet. And this should take us 6 or 7 minutes. So at this stage, we're literally only looking at the trial balance. Okay, we're not looking at any adjustments whatsoever. All right, and what we're going to do, we're just going to identify now where these items are going to go. And then we are going to just slot them into our accounts then. So the authorised shares up the top, the amount of shares that we are allowed to sell and the amount of money that we are allowed to raise is up the top of the question, and that will go into the balance sheet. Financed by capital and reserves. Land and buildings and the accumulated depreciation will go into the balance sheet, tangible fixed assets. Office equipment and delivery vans is going to go into the same place, balance sheet, tangible fixed assets. The opening stock is going to go into the trading account. The patent is going to go into the intangible fixed assets. The profit and loss balance at the bottom is going to go into the bottom of the TPL, but it is actually a loss because profit is actually a liability to the owner. So if the profit was on this side, if the figure was on this side, this would be a profit. This here, unfortunately, then is a loss. So if you've got the profit and loss on the first, on the left hand side, the debit side, that is a loss. If it's on the credit side, that would mean that they made a profit last year. So then we have discount on the credit side, which is a revenue. Okay, so it's on the credit side, so that's a revenue. That is discount received. TPL, add operating income. Then you've got your purchases and sales, which will go in the trading account. You've got your director's fees, which is an admin expense. You have debtors and creditors, so balance sheet, current assets, and then creditors minus 1 year. Bank is on the credit side, so that is a bank overdraft because that's a liability. Okay, bad debts provision, we are going to take this away from our debtors figure. We are going to say, okay, of the 92,300 debtors that we have there, we assume that we might not receive 6,200 of that. It hasn't happened yet, but potentially we might not receive that. So we have to show that in our balance sheet. Advertising is an S&D expense in the trading profit and loss. 3% investments are in the balance sheet in financial fixed assets. Salaries and general expenses are an admin expense in the TPL. Rent received, so they're very nice to you. They've actually given you the word received here, but if the rent was on the credit side without the word received, you should know that it was rent received because it is on the revenue side. Debenture interest paid for the first 4 months. So this figure here, the 6,400, is going to help us calculate how much debenture interest is due for the year. We have debentures for the entire year, as you can see in the line below, okay, which will go into balance sheet, financed by creditors plus 1 year. But we have them for 12 months, but we've only paid 4 months interest there, right? So therefore we're going to have 8 months interest due. So therefore that's going to help us in our balance sheet, creditors minus 1 year. It's going to be our debenture interest due. Then we have VAT on the debit side, so that's going to be balance sheet current assets. Then we've got dividends paid, so we're going to be taking that away at the bottom of the trading profit and loss. So that is dividends paid to our shareholders. So money taken away. Then PAYE, PRSI, USC, so it's on the credit side. So we obviously then still owe the revenue commissioners because on the liability side, so that will go into creditors minus 1 year. Capital reserve and the ordinary and preference shares are all going to go into the balance sheet financed by capital and reserves. Okay. Now, so here we go. This is how this is all going to fit in. So I'm just going to put them all in, okay? And then you can pause the video and see, you can write them all in yourself. It is very, very, very important that you double check, okay? When you're at this stage, it's very important that you have put in the figure correctly, because I have seen a lot of students over the years, mix up figures, or, instead of putting in 758, they might put in 785 or something like that, and they lose marks. So just make sure that you're either highlighting the figure or you're doing whatever you need to do to just double check when you're at this stage, when you're on step 2, just double check it while you're here, okay? And just make sure that you've got it all right, because there's no point throwing away valuable marks. And it's just very important at this stage, that you're making sure that you've got salaries and general expenses in admin and not in, selling and distribution. It's important that you've got advertising under selling and distribution. It's very important that you've put the discount in the right place and that you haven't treated it as discount received up in the selling and distribution. So it's a good chance for you to double check all of those figures and that you've put them in the right place. Very, very, very important. Okay, so that's step 1 and 2 done. And when you have those steps done, you can literally just put them behind you once you have them all checked. Step 3 then, you're going to calculate the investment income and the debenture interest for the year. So this is going to take 3 or 4 minutes, and just a bit of background on this. Your asset investments is going to go into your financial assets. Your investment income for the whole year is going to go into the trading profit and loss. And it doesn't matter if we have received it all or not, it's going to go in here. But just so you know, every single question 1 final account, you're always going to have any investment income due in your current assets. Okay, so any investment income that we have not yet received is going to go in here as current assets, so investment income due. The same goes for debentures. So the debenture loan, the long-term loan itself, is going to go into creditors plus 1 year. The amount of the debenture interest for the whole year is going to go into the TPL, and it doesn't matter if we have received it or not received it, sorry. It doesn't matter if we have paid it all or not. And again, just to let you know, you're always going to have debenture interest due in the creditors minus 1 year. Just every single final account question, you're always going to have it. So that's why I put it as a step, and it's going to help you in section 2 questions as well, because they don't always ask you to do this. But if you create this habit here in question 1, you'll be well able to do it then in the other sections. So looking at the question here then for East Elm, we can see here that they have 3% investments and they have 6% debentures. So the 3% debentures, 3% investments, 124,000, and the rate that they're getting on that is 3%, and they bought it on the 1st of the 2nd, so they had it for 11 months. So working out the months is definitely the reason why people don't get they lose their H1s. They're going to use the wrong amount of months. Okay, then the debenture interest. So you can see here 6% debentures, including €60,000 issued on the 1st of the 6th 2022, 280,000. So you have 280,000 debentures at the end of the year, but before the end of the year, like on the 1st of the 6th, or the 1st of June, they got a top up of 260. So before the 1st of June, they only had 220. So 220 by 6%, which is the fixed rate of interest there, multiplied by 5 over 12 months, that gives us 5,500. And then 280,000 by 6% multiplied by 7 over 12, so the last 7 months is 9,800. We add those two together, we're going to get 15,300 debenture interest for the year. So where do we put these in? So we have our layout done, so we're going to be putting our just workings straight in. Okay, it's absolutely fine to just do your workings right there. So 3,410 investment income and the debenture interest 15,300. Now, as I said, we're always going to have investment income due and debenture interest due. So the 3,410 is going to go up into the investment income due here, and the 15,300 is going to go into debenture interest due here. So 15,300 minus 6,400, that was in the trial balance, okay? So that is steps 1, 2 and 3 done, and at this stage you've definitely earned between 40 and 50 marks in the question, and the only reason why you picked up your calculator was to work out the investment income and the debenture interest due. So look, you'll always be at H7, H6 at this stage, okay? So you will never, you'll never be able to fail a final account question again, even if you only had 15 minutes to do it in. Okay, step 4, we're going to start our adjustments. So there was 9 adjustments this year, and we're just going to get stuck straight in. So the following information and instructions are to be taken into account. So number 1, stock at cost on 31st the 12th, 2022 was €95,200. This figure includes damaged stock, which cost 7,200, but now has a net realisable value of 25% of cost. So how's this going to look? So what we're going to do from our closing stock in the trading account, we're going to minus 95,200, we're going to put in 95,200, but from that we're going to minus 7,200 damaged stock, but then we're going to add back in 25% of that. So 25% of 7,200 is 1,800, so you're going to add that back in there. And you also need to put your closing stock into your balance sheet, into your current assets as well, and you're just going to write as per TPL. So whatever your figure is here for closing stock, even if it's incorrect, you put it over here, you're going to get the marks for it there. So that's really good news. Okay, adjustment number 2, patents incorporating 5 months investment income are being written off over a 6-year period which commenced in 2021. Okay, so patents incorporating 5 months investment income are being written off over a 6-year period which commenced in 2021. All right, so why on earth is there 5 months investment income in a patent account? This is a bit silly, right? So the bookkeeper put investment income in the wrong place. Patents are an asset account, whereas investment income is a revenue account. So they put a revenue item in with an asset item. So it's completely wrong, okay? So 5 months investment income that was put in the patent account, right, is worth 1,550 when you top that up, because you've got your investments here, 124, 3% of them, and multiply that by 5 over 12, that is 1,550, okay? Now, where should investment income have gone? So the bookkeeper should have put investment income into the 1,550, but it actually went into the patent account. So for us to fix the patent account, we have to enter the investment income where it should have went. So if we're adding to the credit side, we also have to add to the debit side, the item in the debit side. So if you imagine the patent account, right, the patent was minding its own business here on the debit side, but then investment income of 1,550 went into that account, which is completely wrong. So for us to fix this, we'll just get rid of it by entering it on the other side as well, and that just means that you're cancelling that out. So you're adding 1,550 to the debit side as well there. So with that, okay, we're going to go patent written off 53,300 plus 1,550 divided by 5 years, and that is €10,970. Up in the patents, in the intangible fixed assets, you're going to have your patents 53,300 plus 1,550, and you're going to minus the amount that you have written off, and then that is going to mean that your patents at the end of the year are €43,880. Now, what you have to do, you have to show that you got your investment income. Okay, so your investment income due, you're going to take away the amount that you've actually received. So you're doing the work that the bookkeeper should have done in the first place by saying, yes, we have received 1,550. So that's going to help us calculate what investment income is due at the end of the year. So that is adjustment number 2 done. Adjustment number 3. No record has been made in the books for goods in transit on the 31st of 12th, 2022. The invoice for these goods had been received for $19,680, including VAT at 23%. Okay, so they're starting to really love putting a bit of VAT into these questions, and it's very important that you can deal with the VAT, okay? So just so you know, the invoice for these goods have been received. So a creditor, your creditor sent you an invoice to say, hey, you owe us some money, right? We sold you goods on credit. This is the amount of money that you owe us, okay? So in the creditor account, we are adding 123% onto the credit side of the creditor account, so 19,680, okay? You owe them 123% because they are going to forward the 23% VAT to the revenue commissioners on your behalf. So they're only going to be getting €16,000 for you, but then they're going to be given over the 23% to the revenue commissioners, but you have to pay them the 123%. In the purchases account, the expense account, so expense accounts are debited when they increase, creditors are liability account, credited when they increase, but the purchase account, you're just going to put the €16,000 into that. And the VAT account, well, this is going to be recorded on the same side as the item that it's attached to. And in this case, you know, it's our purchases. So if it was sales, it would be attached to sales. If it was purchase returns, it'd be the same side as the purchase returns are recorded. So whatever item it's attached to, you're going to record the VAT on the same side. Okay. So we credit the creditors 123%, we debit the purchases 100%, and then we're going to debit the VAT, the 23%. Now, this is where it gets a little bit complicated. We need to look at the trial balance, okay, and see where the VAT already is. So you guys already have 2300 written into the current assets in the balance sheet. And so that means this is going to be debited, the VAT is going to be debited here, and the VAT is already on the debit side in the trial balance. So therefore, you're going to be adding the 3680 to the 2300 that you already have. Now, the fact that these were in transit on the 31st of the 12th, 2022 means that it's going to impact the closing stock as well. And the amount that we're going to be adding to the closing stock is the exact same as the purchases, the 16,000 there. So let's have a look, see how this impacts your account. So you're adding the 16 to purchases and closing stock. That's also obviously going to impact your closing stock over here, but you'll just fire in whatever your the same figure is here. Okay. Your creditors, you're adding the 123%, and the VAT, you're going to be putting the 23%. And as you know, we know why we're adding it, because it was already on the debit side in the trial balance, and now the adjustment that we've just had, we have to debit it, so that is why we are adding. So very important that you understand that VAT is recorded on the same side as the item it is attached to. Okay, adjustment number 4. So goods with a retail selling price of €12,000 were returned to a supplier. This was correctly entered in the books. The retail selling price was cost plus 25%. The supplier issued a credit note showing a restocking charge of 10% of cost price. No entry was made in respect of the restocking charge. Okay, so let's read this again. Goods were returned to the supplier. The return to the supplier was entered in the books correctly. And it says the retail selling price was cost plus 25%. So this 12,000 is 125%. Now, it's saying now that the supplier or creditor issued a credit note showing a restocking charge of 10% of the cost price. So 12,000 is the 125%. Cost price is going to be 12,000 divided by 125 multiplied by 100. So the cost price from the creditor is 9,600. So they are now charging us 10% of the cost price to say, hey, it's costing us to restock this stuff that you're just after sending us back, so we're charging you for it. So the charge is going to be €960, which is 9600, sorry, there should be another zero there, multiplied by 10%. Okay, so how do we treat this 960? We are going to add 960 to purchases, and we are going to add 960 to creditors. We're adding the 960 restocking charge to purchases because the restocking charge relates to purchases that we previously made. We're adding it to the creditors because that's the person who we would owe the money to. Okay, so we have to say, okay, our creditor account, we're increasing it €960. So that is adjustment number 4. Adjustment number 5, provide for depreciation on delivery vans at the annual rate of 15% of cost from the date of purchase to the date of sale. Note, on the 30th of the 4th, 2022, a delivery van which cost €36,000 on the 30th of the 6th, 2019, was traded in against a new van which cost €45,000. An allowance of €18,000 was given on the old van. The bank transfer for the net amount of this transaction was entered correctly in the bank account, but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so quite a few things then that we're going to have to do here. So we're driving in an old van and we're getting an allowance of 18,000 from the Ford garage or whoever it is, okay? We want to drive out in this new van, okay? So we need to record that we traded in an old van for a new van. We need to do the depreciation charge for the year. We need to work out what's our profit or loss on the sale of the old van. We need to fix the purchases. We'll have a read of that again, but we need to fix the purchase figure. And then finally, we'll need to calculate the accumulated depreciation on the delivery vans. Okay, so first of all, we will fix the purchases figure because it's saying here that the bank transfer for the net amount of this transaction. What transaction was that? Well, the transaction was that we drove out in a new van, but we left an old van and we got 18,000 for the old van. So the old van, 18,000, but the new van cost 45,000. So the check for the net amount of that would be €27,000, okay? But it's saying that the bank transfer, the bank transfer, not the check. So the bank transfer for the net amount of this transaction was put into the bank account, right? But it was incorrectly treated as a purchase of trading stock. So a new van would be debited in the vehicles account. Purchases of trading stock is debited. So look, they put it into the purchase of trading stock, same side. So for us to take it out, we are going to minus the 27. So minus 27,000 there from purchases. Okay, so that's purchases done. Purchases fixed. Next, we're going to look at the cost of vans. So we sold an old van that cost 36, or we didn't sell it, we traded it in, and then we bought a new van which cost 45. So we're minus 36 and plus 45. So that is 184,000 is our new cost of vans at the end of the year. So the 175 from the trial balance minus 36,000 old van, and then add the 45,000 new van, and that's how that works out. Now next we're going to do the depreciation charge for the year. Okay, so it says here, provide for depreciation on delivery vans at the annual rate of 15% of cost from the date of purchase to the date of sale. Okay, so provide for depreciation on delivery vans at the annual rate of 15% of cost from the date of purchase to the date of sale. So we depreciate vans at 15% of cost. Okay, now from the date of purchase to the date of sale. So a couple of things have happened here. We had 184,000 worth of vans at the end of the year, but at the start of the year, if you remember, we only had 175. So for us to take a look at it, right, we traded in the old van for the new van after the 4th month. So for the first 4 months, we had 175,000 worth of vans, and for the last 8 months, we had 184,000 worth of vans. So we're going to calculate 175,000 by 15% by 4 over 12, that is 8,750. And then we are going to multiply 184,000 by 15% by 8 over 12 months, and that is 18,400. We add those together and we get 27,150 depreciation on delivery vans, and that's that. Okay, next we will work out whether we made a profit or loss on the sale of the old van. So every time we get rid of a fixed asset, we have to get rid of the accumulated depreciation for that. We also have to work out like did we make a profit or loss when we sold that. So looking at the dates that we had the old van for, we bought it on the 30th of the 6th 2019 and we sold it on the 30th of the 4th 2022, right? So in 2019 we got it on the 30th of the 6th, so we had it for 6 months of 2019. We had it for all of 2020, all of 2021, and then in 2022 we just had it for 4 months. Okay, so 4 months there. So 6 and 12 and 12 and 4 gives us 34 months. Okay, so 34 months we had that old van for. So for us to work out, did we make a profit or loss on the sale of the old van, we just have cost minus accumulated depreciation on the old van is equal to the net book value. And then we compare the allowance to it, and then we work out, did we make a profit or loss on the sale of the old van. So we'll see now. So the cost is 36,000. Accumulated depreciation will be 36,000 by 15% by 34 over 12 months. So that is 15,300 euro, giving us a net book value of 20,700. We compare it to the allowance of 18, and that gives us a loss on delivery van of 2,700. And so that is going to go up into the selling and distribution expenses. So the figures, the workings, that we're getting the marks for, 36,000 minus 15,300 accumulated depreciation, and then comparing it to the allowance of 18. So that is that. That's the profit or loss working. Next, we're going to work out accumulated depreciation on all vans. So at the end of the year, how much is the accumulated depreciation? So we already had a figure of 40,000 accumulated depreciation. That came from the trial balance. Next, what we're going to do is add the 27,150 depreciation charge for the year. And then what we're going to do is we're going to take away the accumulated depreciation on the old van, because if we don't have that old van, if we don't own that anymore, we don't need to record the depreciation on it. So 40,000 add the amount for the year, 27,150, and minus the 15,300 will give us 51,850, and 184 minus 51,850 gives us a net book value of 132,150. So that is the depreciation working for delivery vans, all done. Next, note 6, so adjustment 6. So it says the suspense figure arises as a result of the incorrect figure for debenture interest, although the correct entry was made in the bank account, and a payment of 4,500 for PAYE, PRSI and USC entered on the incorrect side of the PAYE, PRSI and USC account, and says the correct entry was made in the bank account. Okay, so suspense adjustment, we're going to use our trial balance to help us calculate this and get this right. So the first thing is saying it arises as a result of incorrect figure for debenture interest, but look, we don't have to worry about the bank account because correct entry was made in the bank account. So they're saying that this debenture interest paid for the first 4 months is incorrect, right? 6,400 is incorrect. So what we have to do, we have to work out, well, what should it be? So if you look here, for the first 4 months, our debentures would have been 280 minus the 60, because they didn't get the 60 until the first of the 6th month. So 220 by 6% by 4 over 12, that gives us 4,400. And so what we currently have is 6,400. So we're going to minus 2,000 there from that to correct it. But if we minus 2,000 from the debit side, as you know, our two sides are going to be in balance then. They're not going to equal, and we can't have that because our two sides always need to balance in accounting, right? So what we're going to do, we're going to look at our item incorporating suspense, and we're going to add the 2,000 there, okay, in order to get that to equal. And now the trial balance equals again. So that's the first part done. The next part says, and a payment of 4,500 for PAYE, PRSI and USC entered on the incorrect side of the PAYE, PRSI and USC account. So it says the correct entry was made in the bank account. Right, so look, a payment of 4,500, right? If you have PAYE, if it's on this side, it's an asset. If it's on this side, it's a liability. So how is it a liability? It's a liability if we owe the revenue commissioners, and it'll be on the asset side if we don't owe them, right? So if we've paid them, it's going to go on the asset side. So that should have been debited 4,500. What happened was that it went on the incorrect side, so it went on the credit side. So 4,500 went into the credit side. So for us to fix that, what we'll have to do is we'll have to originally put in the original 4,500 that should have went in. And for us to correct that 4,500, we will have to put the 4,500 on the debit side as well. So that's 9,000 that would have to go on the debit side of the PAYE account. Now, if we were putting 9,000 on the debit side of the PAYE account, that would be the same thing as us minusing 9,000 from the 48,200. And as you know, if you put minus 9,000 on the credit side, your two sides won't equal, and what you will have to do is put 9,000 on the debit side, which is where your item incorporating suspense is. So your item incorporating suspense is on the debit side. If you minus 9,000 from the debit side, you also have to minus 9,000 from the, if you minus it on the credit side, you also have to minus it on the debit side. So your two sides now equal again. So we're going to take our trial balance workings that we did. We're going to add 2,000 and minus 9,000 from your salaries and general expense. So that's entered. In your debenture interest due, you're going to change that to 4,000. So that's that done. And then in the PAYE, PRSI, USC, you're going to minus 9,000. And then that's done. And then that is your suspense adjustment completed. Next adjustment number 7, says the company revalued the land and buildings at 1.1 million on the 1st of the 1st, 2022. The land element of this new value is €300,000. The revaluation has yet to be reflected in the accounts. Buildings are depreciated at the rate of 2% of cost per annum. Okay, right, so look, it was revalued on the 1st of the 1st and it's never been put in yet. Now, so it was revalued at 1.1, land value is 3,000. We'll do the depreciation on the buildings first, right? And hopefully you'll know that we do not ever depreciate land. So what we'll do is our 1.1 million that it's worth minus the 300,000 land multiplied by 2%, and that is 16,000 euro buildings depreciation in the admin account there. Now, that 16,000 is going to be going up in the accumulated depreciation because we revalued at 1.1 million at the start of the year. So we rewound to the start and started at 1.1 million, and now the depreciation is 16,000, and then the net book value 1,084 altogether. Now, when we revalue land and buildings, we are going to have a revaluation reserve. The revaluation reserve just shows us that the owner is sitting on something of value. It's not a profit until like they would maybe sell the buildings, right? But we have to show in the balance sheet that the owner is sitting on something of value. The revaluation reserve is 270,000. How did we get that? Well, it is the difference between the 1.1 million that it's now worth and the 950 that we took from the trial balance. So that is 150,000 difference. And then what we do is we add any accumulated depreciation back in, and in this case it was 120,000. So 150,000 plus 120,000, 270,000 is your revaluation reserve. So that is the crack there with that. So that is adjustment number 7 completed then. Next, we have adjustment number 8. So this is our bank adjustment. So it says the figure for bank in the trial balance has been taken from the firm's own records. However, a bank statement dated the 31st of the 12th, 2022 has arrived showing a bank overdraft figure of €31,200. A comparison of the bank account and the bank statement has revealed the following discrepancies. Number 1, a credit transfer of €900 had been paid directly to the firm's bank account on behalf of a debtor who has recently been declared bankrupt. This represents a first and final payment of 30 cents in the euro. And number 2, a cheque issued for €1,300 to a director had not yet been presented for payment. Okay, so we're going to do our little layer like this. Okay, we're going to have the book accounts bank figure in the middle column here. We take that from the trial balance, so it's on the credit side, 33,400 overdraft. The bank statement figure, so let's just call it AIB Bank, right? So overdraft was 31,200, so that goes into this column here. And then we'll do any other accounts that are affected, it's going to go here. So looking at the first one, it says a credit transfer of €900 had been paid directly into the firm's bank account on behalf of a debtor who has recently been declared bankrupt. This represents a first and final payment of 30 cents in the euro. Okay, so we have to think about, right, which bank figure is this then going to impact? Is it going to impact the bookkeeper's bank figure, or is it going to impact AIB's bank figure? Now, credit transfer being paid directly into the firm's bank account, AIB will definitely have known about that first because it got paid into them, okay? The bookkeeper then needs to record that 900 came into the bank account. So what they're going to do, they're going to minus 900 then from the overdraft. Now, what was this 900 in relation to? We'll read it again. Credit transfer of 900. So credit transfer just means, one person pinging it to another person's bank account, online transfer, Revolut transfer, whatever it is, okay? So being paid into the firm's bank account on behalf of a debtor who was recently being declared bankrupt. So this represents a first and final payment of 30 cents in the euro. So look, that's not great. The debtor's gone bankrupt. They're not going to be paying us the rest of it. So every bank adjustment figure, you're always going to have bad debts written off or bad debts recovered. In some cases, I've seen they've put both in, but this here, in this case, this is bad debts written off. So this is not great, okay? This is, it's not good news. So the business is not going to get 2,100 of the debt of 3,000, okay? So bad debts written off, it's going to be €2,100, which is going to go into the selling and distribution expenses. And the debtor is going to be reduced by the 3,000, which is the 900 that's gone into the bank and the 2,000 that they are never going to receive. So like the debtor's going to be, it's the 100% is going to be taken away from the debtor. The 70% is going to be the bad debts written off. And then the 30% is what we've received. And that's 30% because, that represented 30 cents in the euro. So that's the first part. Second part says a cheque issued for 1,300 to a director had not yet been presented for payment. So a cheque issued for 1,300 had not been presented for payment. So the bookkeeper here has given a cheque to a director. The director has just gone and put it into their wallet, into their back pocket, into a drawer, whatever. They just haven't walked into AIB to cash it. Now, this does not say that the bookkeeper has not recorded it. We can assume that the bookkeeper has recorded it and we have nothing to do in their books. But when AIB find out about that, the fact that we have issued the check, when the director goes into AIB and tries to cash the 1,300 check, it will increase the overdraft by 1,300. So we are going to have then 32,500 overdraft on both of these sides. So we know that we are correct with the bank figure when we get the same bookkeeper's bank figure and the same AIB bank statement figure. So that is how we do the bank adjustment. So taking that work in there and now putting it into our accounts, right? We're just going to minus 900 from the bank, and the 32,500 is our final overdraft figure. Our debtor, we're going to minus 3,000 from debtor, and then our bad debts written off, we're going to put that into our selling and distribution there in our trading profit and loss. So that is the bank adjustment done. Now, the last adjustment, it's got a few things that we have to do here. So the directors recommend that, number one, provision be made for investment income due and debenture interest due. Okay, well, this is lovely and easy for us because we've already done the majority of the work here. All we have to do is take out our calculators and calculate what is left. So we already had investment income due 3,410 for the year, minus 1,550 that we had received up in the patents, and now that's 1,860. Our debenture interest due, we already had worked out 15,300, and then we had worked out the correct debenture interest paid figure, and that gives us 10,900 debenture interest due there in the creditors minus 1 year. The second adjustment there, equipment is to be depreciated by 10% per annum on a reducing balance basis. So reducing balance basis just means using the net book value of the equipment. So it's the cost minus the accumulated depreciation that's already been charged on that. So if we saw from our trial balance, we know that there was 33,000 already taken away from the 65,000 cost, right? So the office equipment in the trial balance was 32,000 euro, right? So that was the figure taken from the trial balance. So we just multiply that then by 10% because 32,000 is the net book value, right? Which is what we use when it's on a reducing balance basis. We're just calculating it on what it's currently worth after the depreciation has been taken away from it, right? So 3,200 is the equipment depreciation for the year, and then we're going to add that to our 33,000 accumulated depreciation. We're going to have 65,000 as the cost, 36,200 is the accumulated depreciation, and then 28,800 is the net book value then at the end of the year. Now, adjustment number 3 then, provision for bad debts to be adjusted to 6% of debtors. So we are going to say, right, okay, the amount that we think we might not receive is going to be adjusted now. So we have to look and find our new debtors figure. So our new debtors figure, 92,300 minus 3, 89,300. And then we're adjusting that to 6% of debtors. So 89,000 multiply, or 89,300 multiplied by 6% gives us 5,358 bad debts provision. So we think potentially 5,358 of our debtors are not going to pay us. Okay, but it hasn't happened yet. Like that's not the issue. It's just we're saying in our balance sheet, listen, we mightn't get all of this. Now we'll compare that to what was already in the trial balance. So the trial balance had a bad debts provision of 6,200. Now this 5,358 is less than the 6,200, so that's happy days. We're delighted with that, and that then is going to be a decrease in bad debts provision. So it was 6,200, that was the figure from the trial balance, but it's now 5,358, so 842 is the decrease in bad debts provision. Okay. Last one, provision should be made for corporation tax of 35,000 euro. And so that just means, listen, we need to pay 35,000 euro corporation tax. Provision should be made, hasn't been made yet. So we are going to have corporation tax due in the creditors' amounts falling due within 1 year because we owe that to the tax man within the next year. So that's all of our adjustments done. The last step then that you have to do, which should really only take you 5 minutes and do not spend any more time than that on it, is totting up your totals. So what you should be doing is, you should be just closing the brackets of stuff, right? And putting the figures in where you need to put them in, okay? So you just have to do a hell of a lot of totting up and stuff, and then you should get 7972 as your profit and loss balance, okay, which you will bring over here, 7972. And when you tot everything up there, you should get your two figures to balance, your total net assets and your capital employed to balance 1406972. If you tot everything up and they don't balance, right, if you've done steps 1, 2 and 3 and you've checked that they're right, next thing that you do, just go back, quickly look at your adjustments. I've put those figures in right, you've tot things up right, everything else. You do not spend loads of time trying to figure out. I've heard stories of students taking 10, 15 minutes trying to figure it out. Those 10 or 15 minutes, you could get so many marks elsewhere. The most important thing for you to do is to just get a profit and loss balance, tot these up, tot these fixed assets up here, because you get penalised if you don't get them. Tot these up as well, because you get penalised here also. Do not spend more than 5 minutes doing that, but hopefully the more practice that you get, the more likely it is that you are, you're going to balance. And just make sure you've got the checks on the whole way. Step 1, yeah, done that, checked it, correct, move on. Step 2, do my figures from the trial balance, put them in, check them, great, move on. Step 3, do my investment income debenture interest, check that I'm right, move on. Adjustment number 1, do it, check that I'm right, move on. You know what I mean? And so just keep doing that, and you'll be becoming more precise each time you practice these final accounts. So look, that's the 2023 company final account East Elm Limited completed then.